because then you've got, 30 or 40 members wanting to join. We heard Lula today from Brazil saying, we need something like this. And it looks like this currency, this gold is coming back as a current, certainly in some form or another, as a currency where you can pin a commodity to it, and you can now have a trade on that commodity based upon the anchor of gold.
In recent discussions, Andrew Maguire, a prominent figure in the precious metals sector, has been joined by Adam Trexler, the founder of Valaurum, to delve into the topic of countries in the global south exploring innovative approaches involving gold and commodities to bolster their currencies and facilitate international trade alongside the US dollar. Following the conclusion of the Brics meeting, the objective of this expanded alliance is to foster robust productivity through the introduction of a currency system backed by gold and/or commodities. Additionally, they aim to establish an alternative payment mechanism that circumvents reliance on the US dollar. Andrew highlights an intriguing initiative in Indonesia, a gold payment system leveraging blockchain technology. This pioneering system allows individuals who lack access to traditional banking services to utilize gold as a medium of exchange on the blockchain. The Indonesian government is poised to launch a revolutionary blockchain-based payments and savings platform outside the conventional banking sector that empowers users to engage in the trade of gold and silver with the option for physical delivery. Just before you watch the Andrew Maguire's interview and learn more about market trends, consider subscribing to our channel and give this video a big thumbs up. Adam Trexler has also shared his insights on the growing trend of countries amassing gold reserves. Gold, as a tangible and dependable store of value, is gaining prominence and significance within the global economy.
But it's interesting, the global south, as we call it, is very much looking now to move towards not competing with the dollar, but alongside the dollar to create, and this is interestingly enough, because we're very involved with this Brics summit that's going on right now. In fact, also Commodities today just launched a their gold POSPay contract today. With it was formally released by the Vice President of Indonesia, and it addresses the millions of unbanked, underbanked Indonesians who can access gold on the blockchain whether you're in a little village, but they can access it through the post office system. So it's interesting, but I think what I'm really trying to get to here from a bigger scale, when we look at the commodity markets, and you're talking about not just oil, you're talking electricity, you're talking all of these components, it's a multi-trillion-dollar market, and ultimately multi-trillion-dollar. So now we have the Brics summit undergoing right now, and we have Sergei Glaznev, and we have his outline, and we actually got good information directly from him while he was on holiday 2 weeks ago, where he outlined his two processes, one very much like the SDR, but the other one is a gold, is a 20 commodity, most liquid 20 commodity currency, which actually has a gold element attached to it, benchmarked to gold. So this is really interesting.
You know, I think it's a very exciting moment and an interesting one. I think it's, I tend to think on decade scales. So, you know, what will happen over the next 6 months? I feel like I'm a terrible predictor of that. What seems absolutely clear to me is that the post-World War II regime of the dollar is under a lot of pressure from internal and external forces. And I think that other governments of the world are looking to gold increasingly. They're increasing their gold holdings. These are public figures of how much gold they're stocking. And the tangibility and the ability to move incredible amounts of value with gold mean that it's only going to increase in value and in importance. And I think that it makes complete sense that various countries are looking for alternatives, and the metal that's been around for 2,500 years as a store of value is probably going to continue to be one, and there are a lot of trades wanting to be pinned to it.
Andrew Maguire emphasizes the impact of Basel III regulations on gold, including the elimination of Tier 3 capital and the introduction of the net stable funding ratio with an 85% required stable funding factor for gold on banks' balance sheets. Notably, Sberbank, previously associated with Andrew, tokenized physical gold on the Stellar blockchain on December 26, similar to Kinesis operations. Sberbank acquired a digital financial assets license in March 2022, launching its first digital asset in July, backed by factored invoices. Metals trader Sulfur supported Sberbank's digital gold assets, reflecting a growing trend in digitizing precious metals in the financial sector. Let's get back to the interview.
Implementation, the Bank of International Settlements, the implementation of Basel III net stable funding ratio regulations to underpin gold. So essentially what happened was on the 1st of January, gold, over-the-counter gold, if you're a liquidity provider that is making a market, foreign exchange markets in gold, for the first time in 50 years, you've had to have physical gold to actually back that position up. Now, this changed gold into a first-tier asset that actually competes with treasury. And this is such an interesting dynamic because and I don't think it's a coincidence, Adam, that on the 1st of January, Sberbank, who we have done business in the past with and know people there quite well, digitized physical gold on the blockchain, on the Stellar blockchain on the 1st of January. Interestingly. I mean, and it's almost as if they took what Kinesis does and did it. They put it on the blockchain. And I think what's happened is I don't think it was a coincidence because I think this is leading out to 2024. And I think what led them to do it was after the weaponization of the dollar. I don't know what your viewing on that is, but I mean, it clearly was weaponized to a degree. And I think they're looking for solutions. But interestingly, it's gold that is their solution. So
the trend I see that's very interesting, and one of the things that drew me to Kinesis was it's one thing to have a peg to a commodity that's abstract. To me, that's not the value of gold. Saying I'll pay you according to the contract, it has to be underpinned by the physical gold. And the ability to take delivery of the gold is one of its primary utilities. That yesterday I was holding a 200-ounce gold bar. It was almost $400,000 worth of gold. That you can hold that in your hand and have that much condensed value. That you could have in your trunk, millions of pounds or dollars worth of gold. The ability to take physical delivery, and that is a real thing, recognized all over the world. And I think that some in the financial sector have gotten a little bit cute with gold, what gold is, and without having that mechanism for actual physical gold, a gold indicator doesn't let the gold market operate correctly, and it doesn't give the intrinsic value of gold that we should all be interested in. I think that the ability to take physical delivery keeps people honest because I can always go and get my gold. And I'm interested in banks and other groups like Kinesis where they say, go ahead, take the gold. It's 1-to-1. It's available. And that gives the confidence that there is a true value backing it. And I think we'll see more and more institutions moving to that model. I hope so.
Patrick Barron, representing the Mises Institute, suggests that the dominance of the U.S. dollar in global trade is coming to an end, and this change will impact all traditional currencies. He points to a recent Brics summit in South Africa, where there was an agreement to start creating a new way of conducting international trade. This new system would rely on commodities, and it's very likely that gold will play a significant role in it. In light of these significant developments and discussions regarding the evolving role of gold, commodities, and blockchain technology in international trade and currency systems, one might wonder, how might these emerging trends reshape the global financial landscape and impact traditional currencies in the near and distant future? Share your thoughts in the comment section. If you liked the video, don't forget to subscribe to our channel and tap the bell icon so you don't miss out on our upcoming content. Surprisingly, around 87% of our viewers haven't subscribed yet. We're aiming to reach 3,000 subscribers in the next 2 weeks, and your support could make a big difference. Thank you for being a part of our community.